Ever pondered on the intricate process that banks employ to decide who gets a loan? It's not magic or mere luck, it's a science that involves sophisticated algorithms and techniques, one of which is KNN classification. But what exactly is KNN classification? KNN, or K-nearest neighbors, is a type of instance-based learning where the function is approximated locally and all computation is deferred until classification. It's like having a virtual neighborhood where each resident is a data point. Imagine a loan applicant, we'll call him John. John is a 35-year-old software engineer living in the city, earning a decent income. He's applying for a home loan and the bank needs to decide whether to approve or reject his application. This is where KNN classification steps in. First, they'll need to identify the attributes or features of John that are relevant to the loan decision. These might include John's age, income, employment status, credit score, previous loan history, and even his residential location. These attributes become the dimensions in our data space. Next, the bank will look at John's neighbors within this data space. These neighbors are other loan applicants who have similar attributes to John. If the majority of John's neighbors have successfully paid their loans in the past, the bank can predict that John is also likely to repay his loan. But if most of John's neighbors have defaulted, then the bank might predict that John is a risk. The K in KNN refers to the number of neighbors the algorithm considers. If K is 5, then the bank would look at the 5 applicants most similar to John. The choice of K is critical in KNN classification. Too few neighbors and the prediction might be too sensitive to outliers. Too many and the prediction might be skewed by distant, irrelevant cases. So how does the bank know which attributes to consider and what value of K to use? This is where training the model comes in. Banks use historical data of past loan applicants and their repayment records to train the KNN model. Over time, the model learns which attributes are most predictive of loan repayment and how many neighbors to consider for accurate predictions. To recap, KNN classification is a powerful tool in credit scoring. It works by considering an applicant's attributes and comparing them with similar past applicants. The majority vote of these neighbors predicts the applicant's likelihood of loan repayment. The choice of attributes and the number of neighbors to consider are critical to the model's accuracy, and these are learned over time through training the model on historical data. So the next time you apply for a loan, remember, it's not just about your credit score or income. It's about how you compare to your neighbors in the eyes of the KNN classification algorithm. It's a neighborhood watch for the digital age, ensuring the financial safety of both banks and borrowers alike.